Well, good day, everyone, and welcome to London again, as we are covering on today's FS Club webinar, How Can Digital Funds Benefit the Markets? And we have with us today as our special guest, Brian McNulty. He's the founder and CEO of FundAdminChain. Now, before you start to think this is all about some kind of crypto world and all that, actually, the great thing about Brian is he's trying to apply a lot of the thinking that's out there to handling the current financial system, and we'll be covering that as we go through. Now, you know me, I'm Michael Mainelli. I'm one of the directors of CN, and it's my privilege to be able to introduce these FS Club webinars, but I can only do so, we can only do so, thanks to the generosity, tolerance, dare I say, of our sponsors, our many sponsors here who allow us to range widely and freely across technology, economics, and finance. And today we're certainly going to be seeing that come together with Brian's presentation. But a quick look at how we're going to handle the session today. The agenda, to those of you who come often, is fairly familiar. My job is to get out of the way as quickly as possible so you can hear from our expert, Brian. Brian will be speaking for 20 minutes, leaving about 20 minutes for some interaction in a Q&A session. And 3 points, if I may. Brian will have his slides posted in a day or so. Secondly, we are recording this and it will be available in approximately 2 working days. That is over the weekend for friends, family, colleagues. You can watch it with popcorn later. It's a good session. And finally, how do you participate in the question and answer? Well, you use the go-to question and answer facility. I'm here with you, so I'm not on Signal or WhatsApp. I'm not watching emails or taking message texts or anything like that. Here with you. But if you put them into the Q&A, a few great things will happen. Firstly, I will throw them into the conversation with Brian, time permitting. Secondly, we will be sending all the questions to Brian with your email attached to it. So if you've got a point of detail or just want to contact him about something, just tuck it in there. Now, just to get things going, we're going to throw up a quick poll on the approximate cumulative value of assets under management of crypto funds worldwide in the third quarter of 2021. I picked the third quarter of 2021 as a bit stable given some of the recent major moves, but just to get an idea of the scale here. So if you wouldn't mind just participating by selecting, is it 21 million, 36 million, 59 million, 71 million, or 96 million? While you're waiting, I'll round them down the other way around, rounding up properly. So 97 million, 71 million, 60 million, 36 million, or 22 million. And I can see out there the vast bulk of people have answered, so we'll just leave it open for a split second, and here comes the results. So 67% thought that it was 96 million. And the real answer, on the other hand, is actually 59.6 million. But it gives you an idea that the sorts of numbers we're banding around are pretty substantial and floating up and down, obviously, based on the volatility in the crypto market. But if we'd asked a question like this only a few years ago, I think most of us would have said probably nil. So things have really changed in a short period of time. Now, Brian, welcome. The floor is yours. Over to you.
Thank you. Good to see you again, Michael, and thanks for the opportunity to speak. A very brief introduction. I've been almost 30 years working in the funds industry, in the front office, and then running several consultancy and software organizations servicing both the fund service providers and the fund managers. So when the world of DLT, blockchain, and tokenization came about, I just seen it as a sort of light bulb moment to get in and look to resolve some of the problems I've helped contribute to over the last 30 years. So if you can go to the next slide, please. So before we sort of launch into how we apply tokenization to the funds industry, and I'm going to talk predominantly about how we're applying it to the mutual funds industry, but happy to take broader questions. They would just basically make sure we're level setting what we're talking about by tokenization. So when we talk about the digital asset, so it's in summary, it's converting the ownership right of the asset to a digital form. So you're creating a digital asset. And that can be, there's usually two, I'm simplifying this somewhat, but there's 2 different flavors, if you like. There's a native token, which is one which is only issued on the blockchain and is not represented off ledger in another asset form, or there is a token which is a tokenized representation of an off ledger asset, for example, a fund unit. So, and it's seen as the next way of then doing book entry process. And you might be thinking, well, hold on, we've already got a digital representation of our assets in the current bookkeeping. It's not quite the same. The differences are that in the current structure, you actually have to have, in most instances, a central validation. So even though you've got digital representation of both sides of the trade, you still need to have that central validation process. And unfortunately, as a result of that, you have many different intermediaries and players reconciling and storing data. What you get by having this tokenized version is, because it's on the DLT, the distributed ledger technology, I'll just cut straight to what we're talking about in this sense. The data is immutable, can never be changed, and it can be shared once amongst multiple parties. So that means that we can have a massive transformation of how we currently share data. Now, that's not the end of it. The sharing and the storing of data being transformed is great, but it's what we can then do from a business point of view off the back of that. And to take one sliver of an example at the bottom before we go into funds, right now, we all know the situation with the house, you need to buy it in its entirety. You can't buy a sliver of it. You can then, if you imagine you've got a tokenized version of it, you can have that subdivided. You can then be buying and selling with more liquidity as a part of a house. So next slide, please. So we're here to talk about the impact on the funds industry. I mean, the mutual funds industry is not broken. It's in the eyes of many, including myself, it's uber inefficient. There are many layers of systems and legacy platforms and reconciliations and messaging, and how we then deal with things like backdated transactions, failed trades, etc. It's just a plethora of activity, and a large chunk of the people that we see on the trains in the morning are going to deal with basically making sure that we are buying and selling in a resilient fashion. So that massive capex, those numerous systems that we built, and legacy systems and satellite systems and messaging layers, we've got the opportunity to do something about that. And hand in hand with that, the backdrop for the fund managers is that they're under increasing pressure from the point of view of fees, because of not just the maintenance of what we're talking about there, the increase in regulatory demand and also distribution, etc. So we've got this sort of perfect storm of a lot of legacy costs and efficiency, pressure on the market. Here comes a potential solution to help resolve some of that. Next slide, please. And I'm not going to go in this, as Michael said earlier, we'll share the slides, but these challenges go across all parts of the value chain, and they're both impacting cost, revenue, and adding layers of complexity from tech, from business, and from a customer engagement perspective, which is driving further pressure on the industry, as is the risk of losing flow to alternative investments. Next slide. So how can the tokenization help? So we touched on process efficiency. We'll go into a little bit more detail. You can read yourself in there the number of different things that are going on from a process point of view, but also the costs from a fund servicing point of view. You've got a massive amount of the fund servicing, so the transfer agent, the other parties' current processes can be removed if you're all sharing the same data set and you're no longer needing to do all these maneuvers. And that then is an impact. I've given one example of many examples out there. For example, just ensuring that the cash and the shares are balanced between the order date and the settlement date. Right now, everybody's running after the cash payments, running after the subs and revs. It's all gone. You basically move to an instant model where there's no need for any of that. Hand in hand with that, you can then envisage, if you've collapsed the sub-register and the distribution side onto the same data set, you can start to see how you can take out layers of costs in the distribution side and ultimately pass them on to the end investor. And if you've got the regulatory reporting and other reporting happening at trade rather than post-trade, and you've got at some point in the future the regulator with a node on the network, then you're removing all of these years and years of effort that we put into build post-trade reporting systems, and you can actually have it at source. Next slide. And there's many other benefits here. Once we get to this point where we're tokenizing cash as well as tokenizing the units, and we'll come on to the challenges of that, then what we're then doing is we're opening the door for instant settlements, atomic settlement as is referred to. So that's the big game changer. It not only makes those savings from a fund processing perspective dramatically better, but it also means that we can have that immediacy of position, which helps the fund manager, the end investor, and it also takes away a lot of the pain that we're going through from the same point of view, the cash side. So from a fund manager point of view, what we're doing here is we're cutting into the cost base, as we talked about. We're improving liquidity if we've got that atomic settlement, and you've also got the look through, and you're giving these benefits to your existing investors. But as we all know, there's a growing number of investors, many of them owning that 50-odd million or trillion we were talking about a minute ago, that are looking for this immediacy of service, this immediacy of position changing, and this is allowing the fund manager to have more flexible products. Next slide. And it keeps going. So it's not just the what I talked about there from an end customer point of view, where we're moving with the tokenized world and the DLT networks around that, is that you can have much easier processes from the point of view of opening accounts, opening second accounts, third accounts with the same fund manager, how you can then reuse your identity to have not go through the pain, but also where we're moving to, we've got federated KYC, federated identity, so that you can join a network, do once, and then not need to fill out as you move into different similar investments. And it goes right the way through the value chain. I picked out a few of them there, but you're giving the end customer a much smoother, cheaper, and timely service. Next slide, please. But that's easy to write all those slides. It's significantly harder to get the industry to adopt it. So it's not easy to actually design the solution. DLT is not that. It's just tech at the end of the day, but it's not that straightforward. You're entering into a new way of doing things, new business processes, new operating models, new financial models, new rate cards, new ways of having the regulatory lens to ensure this is resilient. It's the business case doesn't dramatically stack up to get the immediate return right now from the fund manager's point of view. You're going to need to run parallel to what you've got right now while we change. The regulatory hurdles are quite severe. The cash on ledger that I talked about is not there yet. We're needing to move in a sort of baby steps towards the promise of whether it's not a stable coin jumping straight to CBDC. And I could go on. I live and breathe this every single day. The hurdles are dramatic, and they are, if you sort of see them like that written down, quite I'll go as far as depressing. However, we're getting there. So there are some that hope that this doesn't change. Of course, there's many that are going to be big losers as we move to tokenized funds and tokenized assets. But there's too many now that are of the same mindset as myself, that this is the opportunity to transform the markets before we retire, for the good of the next generation, and also for the good of those that want to move fast, and that we can actually transform the markets into a much more efficient way. And that's happening. So maybe go on to the next slide and we'll talk about what we're actually doing and where we've got to. And we're just one. It's not just FundAdminChain. Happily promote the other ones that are doing this. There's guys in Luxembourg, Funds DLT. There's guys in France that are doing it. There's others popping up. Many popping up, but not with the same sort of rigor behind it. But I hope they all succeed, because it's about actually just changing the market. It's not about one winner here. So we've created the platform that connects all the different participants on a same data set that then gives all those benefits we're talking about, to have that sort of single common network and single common register, so that ultimately it's much easier for a fund manager to change service provider, to engage service providers, much easier for these parties to trade amongst themselves. Go on to the next slide. And what we're really doing is we've created a distributed ledger network. Ours is a private network, so only those that have permission can get onto the network. And we are then, as a result, having all these market participants joined up on the same data set in the FAC solution, which will be hosted in the London Stock Exchange. And basically, we're allowing the launching, the distribution, the trading and settlement of these tokenized funds to happen in a much more efficient way. Next slide, please. Probably just going to flip through a few, Peter, because I want to leave time for questions, and these will be distributed anyway. So I've talked there about why we're doing it and how I'll get to where we've got to is probably more appropriate. Go to the next slide, please. So this is where we are. We've got numerous fund managers inside our tent. I would say about 25 blue chip fund managers working with us, and we've got 6, I believe, fund service providers, TAs working with us. We're now moving from dummy funds to real funds. So we've got 4 fund managers. I've not a chance to see whether I can name or not, but 4 fund managers, not necessarily the logos you see there, are now launching real funds on our platform. So our platform will be moved into the London Stock Exchange, and we've got the fund. This is phenomenal. We've got competing transfer agents and service providers agreeing to collaborate on the same infrastructure and doing it in an extremely collaborative and open way to make sure that the future state works for them. We're now bringing in the distributors so that the funds can be distributed once we've launched them onto the platform. And as I mentioned earlier, we need the regulatory side. So we're fortunately inside the FCA sandbox. We've got the FCA where we've got the representatives of our fund managers, TAs, distributors, London Stock Exchange and ourselves to go through the exact change in business process that tokenisation of cash and funds brings to ensure that it is resilient. There's a massive demand to go fast. We shouldn't go fast. We should go and make sure we do this in a broken down way that we can achieve the end state, which is a resilient, much more efficient marketplace. Just next slide, please. Again, I'm not going through this. There's a lot of detail. We are transforming it, and we're doing this in the level of nuts and bolts you would expect. Every single function, every single current flow from a TA distributor, how does it currently work? How does it work on our system? Making sure that it's resilient, it's technically sound, it's regulatory sound, that we test it, and then we scale it, and off we go. We are going to close these funds down at the end of this next pilot. We're not ready for production by some stretch, but we're certainly at the pointy end of anyone else, any other initiative that's actually happening in the industry, simply because of the openness and collaboration across the parties. So we'll just go forward another couple of slides. I think there's more in here that please come back to me if you get any questions on this stuff when you see it, but this is more to show that there's a lot going on. Just go on to the next one, please. So that's where we are. So we're launching real funds, regulatory environment. We've got the London Stock Exchange, and in parallel with all that, as if we weren't doing enough, we are in parallel on the private side. We are building a regulated primary and secondary trading venue, regulated in Bermuda to begin, in the Caymans, to enable the primary and secondary trading of private funds. So I'm going to pause there. I don't want to make this about FAC. I'd love any questions on who else is doing stuff, because as much as I can only talk from ours, I'm aware of other initiatives that are equally exciting.
Brian, that was great, and thanks so much for keeping to time. In fact, beating time. a lot of ground to cover, and that was a really good exploration of what is really a look at the deep plumbing, isn't it? We're really checking out the deep stuff here, and I think this is in many ways a far more exciting project than some of the cryptocurrency ideas and all that. And in fact, Bob McDowell makes a point here that you might like to react to, and he's basically saying, is the tokenization of funds essentially a professional market rather than enabling retail access to buying and selling under the tokenization regime? I know you said that there were benefits to the end user, but is it really more a kind of deep plumbing amongst professionals?
No, I think to begin with, yes, it's probably more getting the players along the value chain to do things more efficiently to then enable the next layer. But hopefully, why we're doing this isn't just to have a better storing of data and taking OPEX out, it's to give a better experience for the end customer. I think once we've got the tokenization of funds and assets, it transforms everything. It means that you can completely disrupt the concept of a fund. You can have your own management of your own wallet, your own portfolio, you can almost see a sort of eToro-esque future state, but we're not there yet. We need to do it one step at a time.
Elizabeth, who works in the markets, is curious. Basically, her question revolves around your use of LSE, the London Stock Exchange, as your business network operator. She's written quite a text here, but basically what she's saying is, if you're using the LSE, what's this got to do with the end user at all? I mean, this is just it's a great project that you're doing inside with LSE and trying to coordinate things that have hitherto not been coordinated. But a bit like Bob, querying the end user benefit of this, at least in an interaction way.
I think it ties up the last question. Now, maybe I wasn't clear in what we're doing with the LSE. We looked around who understands this new world, who understands the requirements to keep a network running in a resilient and safe way. And that answer could have been anybody. It turns out it's the London Stock Exchange. They've spent the most time investing, in my view, being the best fit for hosting our solution rather than as a startup in someone's bedroom. So we're using them as the best place to have resiliency for a solution. However, coming back to the previous question with Paul, I'd like to think that once we get this in the marketplace, there's a great opportunity to potentially work with them from the point of view of tying up with the retail investor. As long as we've got that vetting of investors coming into the funds as they normally would, we can do that in a more automated way and a more efficient way through smart contracts and federated ID. But I don't think the London Stock Exchange are slowing anything down. They're just basically making sure that when we go live, this thing works.
Well, funnily enough, the audience and you are interacting in a great way here in terms of they'd like to explore that just a little bit further about the networks and resilience. So Bob McDowell again, how additionally robust do the networks need to be for business continuity under tokenization? And then Clive, let's start there. So how additionally robust do the networks actually need to be?
So it doesn't need to be any, it just needs to be, it's a new technology, the same way as when SQL came along, it was a new technology. So it's a new skill set, and it needs to be that the maturity of the technology is resilient. Then you need to make sure whoever's your network operator is attuned to how the system works from a first, second line support. So I don't think there's any additional level of resiliency versus putting a different app in. It's just a different skill set to be able to support it.
Okay.
And just can you just check, maybe if you can answer back, can you just check the answer of Elizabeth's question to her satisfaction? If not, Elizabeth, could you just follow up that? I want to make sure I did actually address it.
No, she's happy. That's good. Just moving along here. Who owns the network which provides the tokenization, and what rights do the users have over the network?
So that's the beauty of what we're doing. We to begin with, it was, if we go back 2 years, it was FAC. Then we talked about the network being owned by the business network operator. Now that might have been where Elizabeth was coming from, but where we've landed is that this should be owned by the industry, by the participants. So we're moving to a model. We're proposing a model that there is out of the participants, there's a rolling board that will just oversee, and it's open. This is open. There'll never be a door closed to another participant wanting to come in, as long as they meet the criteria for joining the network.
Okay. Now, Clive Bullen wonders about the negative effects on the environment of always-on IT systems, but I think that may be sort of outside the view here. But he has another question here. What's the link to NFTs? And in your opinion, are NFTs viable? Clive says they seem to be crazy to me.
I'm not anything to do with them, possibly for the sake. Clive, it took me about reading through what are they about 15, 20 times to just make sure I had actually understood it. And then once I understood it, do I want to spend my career in it? No.
Yeah, fair enough. I think I'm with you there. Mark Waters is curious. So you're talking about tokenization of funds. Any thoughts on the tokenization of assets for central banks?
Assets, or so what's the connection with the central banks? Or is it tokenization of cash? or is it two different? So
Well,
we want CBDC. The quicker we can get that, the quicker we can get the atomic settlement I talked about. I think until we all know the risks with stablecoin. So I personally, unless we see some resilience around that, as a stepping stone. Right now, we're needing to design a system for this, having the both legs on the same ledger and having all that beautiful benefits, and then we can't do it. So we're sort of hamstrung, and we're doing sort of baby steps of getting there. So we need that CBDC to go as fast as possible, in my humble opinion, so that we can get the benefits that it promises. In terms of assets, like tokenization of assets, once we tokenize the underlying, there's another full plethora of benefits that we can buy into from the point of view of the end investor and the fund manager. So I'm excited about that too.
Now, there was a good report done by the Investment Association. Actually, I think the Investment Association sponsored it, but it was largely done by CMS, Cameron McKenna, a couple of years ago on the tokenization of funds. And in that, they listed a number of things that they saw as a problem. One of them was AML KYC, anti-money laundering, know your customer. But you said in your presentation that this is an actual opportunity. Do you want to expand on that a little bit? Because people here in FS Club have heard my mantra for several times, which is if Britain's open for business, try opening a bank account. And AML KYC is a huge flashpoint for the retail, which you did emphasize there are some benefits there.
Yeah, I mean, the Investment Association and CMS are both inside FAC. So they've got a first, they're heavily involved in the regulatory work stream. And inside that regulatory work stream, we're talking about the opportunities around KYC, AML, and other ways. If you've basically got, if you've got if you're able to access a verifiable identity, and you then can, as an investor, you've got that identity on the same chain, then if you're KYC'd as an individual onto the network, and you've got the verification as to what sorts of investments you want to participate in, then what we're designing is a model that you can then move from one investment to another without needing to refill out all of those painful checks that we go through and documentation for the subscriptions and redemptions after you're on the network. So again, we're designing this and we're working at this, and we've got baby steps as to how we're going to roll it out. In this next pilot with the real funds, we're not moving to a federated KYC ML model, but we fully intend to in one of the subsequent ones. I think it's a brilliant opportunity to make that part of the clunky markets much easier. And if you've got, we're at the mercy of verifiable identity, but the technology, the smart contracts can do this stuff quite easily.
Now, there's a bit of a paradox here in a way, not in any way denigrating your project, but two big areas where the internationalization of finance caused problems. Nevertheless, despite internationalization, regulation is local. And secondly, we've got the AML KYC issue being local, and probably thirdly, for that matter, and I know the Law Commission came out with a report on crypto assets, which was very helpful. But again, we've got the kind of the jurisdictional bit of are these valid contracts and what do they represent? So you've got three areas where what one might do in the UK would go a lot more smoothly if the international environment were moving along in lockstep, which it's certainly not. How much of a problem is that for you, that the pace of change here means that the international environment is uneven?
So I'll answer to the point of view of the UK. I think we're not going fastest, for sure, and it's great to see that some of the more recent announcements and the engagements, I think we're going to hopefully pick up the pace. How do we join it all up? It's no different from a non-tokenized world. We've got these problems in the current marketplace. We certain regulatory regimes are saying are conflicting and are different points of development, and we make it work. I don't think that any one tokenized platform is going to control the world. So I was talking to all the guys that are doing exactly this in Germany a couple of times last week, and we're talking about how we can look to, as everyone says, interoperate. I think it's important, but it's still no different really from what we're experiencing in the current world. I just want to make sure that I don't come across here as if thinking that this is going to be turned on tomorrow and we're not going to have traditional funds. I think that there's enough momentum, not just with what we are doing. You've seen the names involved, but in other parts of the world, that the horse is now bolted. This is going to happen, and the number of funds that are going to be tokenized or subclasses of existing funds is just going to grow and grow and grow. And eventually, we'll be talking about how do we move the legacy book over. But it's not going to happen overnight, and it can't happen globally at the same time. We just need to push on and make sure the UK is at the forefront of this, and make sure we're talking in a collaborative way with the guys that are doing it in Luxembourg, Germany, and France, and see how we can work together.
Mark Waters is starting me down a chain here. Are you using any of the regulatory sandboxes around the world, or here?
Yep, yes. We're in the FCA sandbox, and we, as I mentioned, on the private side, we're more working out of Cayman and Bermuda. But in the UK, it's the FCA, and we're absolutely grateful and so delighted to be in there. It's great to have a touch point in there, but I think it's also good to come out of dummy funds and go into real funds, because then what you need, Mark, is you need what we've got the representatives from a senior compliance and regs perspective in all of these different firms, not only in our regulatory working stream, but engaging on how we engage the regulators. Has moved away, hopefully, from sandbox into something a little bit more mature. But the sandbox has been an excellent springboard for us to hear the regulators' way that they would like us to make sure we are thinking in a resilient fashion, and how the new way of trading and is thought through in a very thorough way, not just to meet the new regulatory regime, but the existing one, but some of the tokenization regimes.
Another issue, just a question here from the audience, but in the sense of analysts, so these funds, how much analysis is going on the funds being developed online and tokenized? Can we put hard numbers on this?
What do you mean by analysis?
Well, analysts, as you know, investment analysts tend to love industries that produce lots of numbers, and therefore changing industries are attractive. But on the other hand, it's difficult to get the numbers out. So, do you think investment analysts should be paying more attention to this as an area?
I think that fund managers in general should be paying more attention to it as an area, and not see it as a operational efficiency, better way of sharing data. It's the potential alpha that you can, it's a potential trading strategies that you can then build, the potential better handle on not just your customers' behaviour, but your own internal team's behaviour. There's lots of reasons why the way that you can change value of your products, the way you can change pricing your products it's not about DLT, it's not about tokenizing funds, it's about what we can then do with it. So what the investment analysts can do with it, I'm not really paying any attention to that side, to be honest, Michael.
Okay.
The funds are not there, we're almost taking, it's not quite dummy funds, it's real funds to make sure the process works, but we're not marketing these to the public quite yet.
Julia George is concerned about getting the time frame right. You can go too slow, you can go too fast, and given that you have to take it in a measured pace, which you've emphasized a couple of times, at what point do you see you've arrived? Is it in a couple of years? Is it a decade away? Is it a continuous process?
Firstly, hello, Julia. It's a long time. I don't think it's decades away, that's for sure. I really hope not. We are fortunate that we've got reasonably deep pockets, but I don't think, from the appetite of what I'm seeing, that the change in attitude of certain fund managers in the last 6 months means that this is only going to increase in momentum. And I think that it's to say, look, I love the fund management industry, but once some of them do it, they'll all do it. It's never changed for anything we've done before. I think we've got some of them that have suddenly realised, they're not suddenly, maybe they've been doing it for a long time, but they're aware of how much of a jump they can have in terms of their investment strategies and the way that they're looking at the future state of their funds. They're going to drive this change, and others will be fast followers. I think you just need to do it slowly, you need to do it robustly and make sure you've got all the parts I've talked about. Technically, we are capable. Fund managers, TAs, this isn't about disrupting, getting rid of the TAs. They should be in the tent. They've got a key role to play as they advance their services into digital custody, etc. We want the distributors in there. We're not trying to disintermediate them. We're trying to make it more efficient. And you need the regulator there. And once you've got all of that together and you've got the momentum and you break it down into manageable chunks, I think we'll see that we'll have real funds live in the next 2 years.
Okay. Now, you wanted to ask the audience a question about what they saw as the main hurdles, to the adoption of tokenized funds. And so I've put the poll up there now. Is it regulatory? Is it just general resistance to change? Is it cost? Is it technical barriers? Is it other? By the way, if you do answer other, please do post in the Q&A what you think it is. And while I'm doing that, I'll pass on a message from Julia to you. Hi, Brian. Good to see you again. So there we go. Anyway, just waiting for the audience to make up its mind here.
We were both on the Securities Institute FinTech Association, and this is a phenomenon. While we're waiting, a really interesting fact, Julia will remember, we're so old that we were about to close it down because there was no interest in technology in the financial markets. Who would have thought that if we roll back the years?
Good. Well, here we go. What the audience seems to think is it's a dead tie between regulatory and resistance to change. So there we are. Interesting response there. So it's a kind of our tried and true problems. Now, just as we move ahead a little bit, a couple of other things. Bob McNulty says he's referencing others' velocity of changes, but Hugh Purser, I think, has a good question to close on. Given all of this, Brian, what do you think the tokenization of funds might mean for the structure of the industry, the different service providers? Will distributors, fund managers, custodians, etc., all fold into one eventually?
Into one. That's interesting because they're all clearly, you've got distributors looking at TA. You've got they're all, and some of them are at a sort of an interesting point where they can't go any further because they'll cannibalize their own customers. So I think there is dramatic change coming. I think some of the more forward-thinking TAs are already making those changes with their digital services that they're offering, and I'm actually happily seeing this change as a way of addressing unnecessary legacy or areas that they never really differentiated themselves on anyway. So yeah, I do think that we will see a sort of stepped approach towards a much more less busy value chain, a less busy marketplace. And I for one, welcome that day. I think there's just too many layers and too many parties all playing an important role right now, but it's up to us all to not just sit on the safety that we've got and go and disrupt the markets for the better of the end customer, because as far as I remember, that's why we're meant to be here.
Well, I think that's an excellent point. You can't have all of this optimization, efficiency, etc., without some changes to the structure of the market, or it's hardly a material. So there's got to be, I wouldn't necessarily say losers from this, but there's certainly got to be a huge redistribution of effort and genuine cost and bureaucratic savings to the end user. Well, anyway,
Michael, just one final point on that. I'd like to just reference how much the industry's changed. I set up the post-trade distributed ledger group in 2015. And collaboration was just coming into the same meeting room. It's phenomenal to see the collaboration going on in the industry right now between competing fund managers and TAs and the likes. It really is. It's a different time to be working in the industry, and I'm really excited about that.
Hmm. Well, that's a really good note to end on. I've got a number of people heading out and sending in their congratulations and thanks for a really good presentation, Brian, and not an easy one for people to follow casually, but an important one. And I personally think that the competition in the sector is turning up. I recently had a bid for 2 funds to be managed, and I was surprised at how the compression of the rates is really there, and how in fact 3 funds quoted exactly the same rate, which is a good sign that either there's a cartel on, or given the drop, it's been that they are genuinely competing hard with each other. Well, I have 3 quick rounds of thanks. Firstly, as ever, to our sponsors who do allow us to go over so many topics, and this is certainly one almost spot on in the center of FS Club, and obviously one of great importance around the world. Is if we can get this right, then we get efficient capital allocation at lower costs and greater liquidity, and really the ability to direct resources where they are best needed. Secondly, I'd like to thank the audience. You've been really pretty great today, because I know this is one of our tougher subjects. So I appreciate you, your comments and your thoughts, all of which will be passed on to Brian. And may I, most importantly, thank you, Brian. You are doing great work at the core of the plumbing, and we really appreciate it. Is there anything you'd just like to say in closing?
No, just good to see you again, Michael. It's been a while. Let's catch up soon.
It has. And folks, do sign on for many of our other events that are coming forward. As ever, really just check out the website. But I would, in particular, point to Monday, Britain's growing role in world trade. It's an opportunity to grill, if you will, Lord Marland, who's the head of the Commonwealth Investment Enterprise Council, and really at the heart of the government on trade, trade finance, what's going on in Kigali at the Commonwealth Head of Governments meeting, what's going on in terms of trade agreements. He is really the go-to person for that, so do join us for that. Again, Brian, thank you so much, and we hope to have you back, because this is clearly one of these projects we ought to keep an eye on as it develops, and we'll try and get you back within 2 years when you can tell us it's all finished. Thank you very much.
Thank you very much. Bye for now.